Starting a business in Kenya is an exciting journey. Every year, thousands of people launch businesses with hopes of creating wealth, solving problems, and building a better future for themselves and their families. Some start small kiosks, online shops, agribusiness ventures, transport companies, consulting firms, manufacturing businesses, or technology startups. While having a good business idea is important, building a serious and successful business requires much more than passion and determination. It requires a strong legal foundation. Many businesses fail to grow because they ignore legal requirements during the early stages. Some entrepreneurs operate informally for years, only to discover that they cannot secure financing, win contracts, attract investors, or expand because they lack proper registration and compliance. Others face penalties, legal disputes, or business interruptions because they did not understand the laws governing their operations. The truth is that legal compliance is not just about following rules. It is about creating a business that customers, suppliers, lenders, investors, and government agencies can trust. The first step in building a serious business in Kenya is choosing the right business structure. This decision affects taxation, ownership, liability, growth opportunities, and the overall management of the business. Many entrepreneurs begin as sole proprietors because the structure is simple and affordable. A sole proprietorship allows one person to own and operate the business. While this option is easy to set up, it has limitations. The owner and the business are legally considered the same entity. This means that if the business incurs debts or faces legal claims, the owner's personal assets may be at risk. Some entrepreneurs choose partnerships when two or more people want to operate a business together. Partnerships can provide access to additional capital, skills, and experience. However, partnerships require clear agreements regarding ownership, responsibilities, profit sharing, and dispute resolution. Without proper agreements, misunderstandings can arise and damage the business. For entrepreneurs who want to build scalable enterprises, a private limited company is often the preferred option. A company is a separate legal entity from its owners. This means the company can own assets, enter contracts, borrow money, and conduct business independently. The owners enjoy limited liability, meaning their personal assets are generally protected from business obligations. Investors and financial institutions also tend to view limited companies more favorably, because they provide stronger governance and accountability structures. Once the appropriate business structure has been selected, the next step is business registration. Kenya has made significant progress in digitizing business registration processes. Entrepreneurs can register their businesses through the eCitizen platform without visiting multiple government offices. The process usually involves conducting a business name search, reserving the preferred name, submitting ownership information, paying registration fees, and obtaining official registration documents. Registration is more than a legal requirement. It is a statement that the business is legitimate and ready for serious operations. Registered businesses enjoy greater credibility in the marketplace. Customers are often more comfortable dealing with registered enterprises because they appear more trustworthy and accountable. Suppliers may also be willing to offer better terms to registered businesses. After registration, entrepreneurs should ensure that ownership records remain accurate and up to date. Businesses often evolve over time. New partners may join, shareholders may change, or management structures may be adjusted. Keeping official records current helps maintain transparency and prevents legal complications in the future. Accurate ownership records are particularly important when seeking investors, selling part of the business, or applying for financing. Tax compliance is another critical aspect of building a serious business. Every entrepreneur should understand their tax obligations from the beginning. Registering with the Kenya Revenue Authority is an important step in becoming compliant. Depending on the nature and size of the business, different tax obligations may apply. These may include income tax, value-added tax, pay-as-you-earn obligations for employees, and withholding tax requirements. Many business owners view taxes as an inconvenience, but tax compliance can create opportunities. Businesses that maintain good tax records often find it easier to secure loans, participate in tenders, and establish partnerships with larger organizations. Conversely, poor tax compliance can result in penalties, interest charges, and reputational damage. Serious entrepreneurs understand that taxes are part of operating a legitimate business. Modern businesses must also pay attention to electronic invoicing and digital record-keeping requirements. As government systems become increasingly digital, businesses are expected to maintain accurate financial records and comply with electronic reporting requirements where applicable. Proper invoicing systems help track sales, manage cash flow, and support tax compliance efforts. They also provide valuable financial information that can guide business decisions. Another important legal step involves obtaining county business permits. Many new entrepreneurs mistakenly assume that registering a business is sufficient to begin operations. In reality, county governments require businesses operating within their jurisdictions to obtain relevant permits. The specific permit requirements depend on factors such as the type of business, location, size of premises, and nature of operations. Operating without the required county permits can lead to fines, disruptions, or closure notices. Serious business owners therefore ensure that they understand local licensing requirements before commencing operations. They also budget for permit costs as part of their business planning process. Some industries require additional licenses and approvals from specialized regulators. For example, businesses involved in healthcare, financial services, education, telecommunications, food processing, construction, tourism, and transportation may need sector-specific approvals before they can legally operate. Entrepreneurs should research the regulations governing their industries and ensure that all required licenses are obtained before launching operations. Failure to obtain industry-specific approvals can have serious consequences. Businesses may face legal action, financial penalties, or operational restrictions. More importantly, operating without proper authorization can damage customer trust and make future growth difficult. Compliance with industry regulations demonstrates professionalism and commitment to quality standards. Financial discipline is another hallmark of serious businesses. One of the simplest yet most important legal and financial decisions is opening a dedicated business bank account. Many small business owners initially use personal accounts for business transactions. While this may seem convenient, it creates accounting challenges and can complicate tax compliance. A separate business account improves transparency and makes it easier to track income and expenses. It also enhances credibility when dealing with customers, suppliers, investors, and lenders. Financial institutions often prefer to see organized business banking records when evaluating loan applications. By separating personal and business finances, entrepreneurs create a stronger foundation for growth. Protecting intellectual property is another legal consideration that many entrepreneurs overlook. A business's most valuable assets may not be physical equipment or inventory. Instead, they may include brand names, logos, product designs, software inventions, or creative content. These assets can distinguish a business from competitors and contribute significantly to its value. Intellectual property protection helps prevent unauthorized use of business assets by competitors. Entrepreneurs who invest time and resources in building strong brands should consider protecting those brands through appropriate legal mechanisms. This protection can become particularly important as businesses expand into new markets and gain greater visibility. Contracts are another essential component of serious business operations. Many disputes arise because agreements were never documented properly. Verbal agreements may seem sufficient when dealing with friends, relatives, or long-term business associates, but they often create misunderstandings when expectations differ. Professional businesses use written agreements to clarify responsibilities, payment terms, timelines, confidentiality requirements, and dispute resolution procedures. Employment contracts, supplier agreements, partnership agreements, service contracts, and shareholder agreements can all play important roles in reducing risk and protecting business interests. A well-drafted contract provides clarity and can help prevent costly legal disputes. As businesses grow and begin hiring employees, compliance with employment laws becomes increasingly important. Employers have legal obligations regarding contracts, wages, working conditions, statutory deductions, and workplace safety. Failure to comply with labor laws can result in disputes, penalties, and reputational damage. Responsible employers understand that legal compliance contributes to employee satisfaction and productivity. Clear employment agreements, fair treatment, and adherence to labor standards help create positive workplace cultures. Businesses that invest in their employees often enjoy lower turnover rates and stronger long-term performance. Record keeping is another critical area that deserves attention. Every serious business should maintain organized records of financial transactions, tax filings, permits, licenses, contracts, employee information, and corporate decisions. Good records support compliance, improve decision-making, and simplify audits or inspections. Imagine a business seeking a loan of 5 million Kenyan shillings to expand operations. A lender will likely request financial statements, tax records, bank statements, and evidence of compliance. Businesses with organized records can respond quickly and confidently. Those with poor documentation may struggle to demonstrate credibility and financial stability. Insurance is another important consideration for risk management. Unexpected events can threaten even the most successful businesses. Fires, theft, accidents, lawsuits, and natural disasters can cause significant financial losses. Appropriate insurance coverage helps businesses recover from such events and continue operating. The specific types of insurance required depend on the nature of the business. Some businesses may benefit from property insurance, professional indemnity coverage, public liability insurance, or vehicle insurance. While insurance represents an additional cost, it can provide valuable protection against potentially devastating losses. Governance is often associated with large corporations, but it is equally important for smaller businesses. Good governance involves establishing clear decision-making processes, accountability mechanisms, and reporting structures. Businesses with strong governance practices are generally more attractive to investors, lenders, and strategic partners. Regular meetings, documented decisions, financial oversight, and strategic planning help businesses remain focused and accountable. Governance also reduces the likelihood of internal disputes and mismanagement. Entrepreneurs who adopt governance practices early often find it easier to manage growth and complexity as their businesses expand. Many Kenyan entrepreneurs dream of securing investment capital. Investors typically evaluate more than just products and revenue. They also assess legal compliance, governance structures, financial management, and risk exposure. A business that is properly registered, tax compliant, well documented, and professionally managed stands a much better chance of attracting investment than one operating informally. The same principle applies when pursuing government or corporate tenders. Procurement opportunities often require proof of registration, tax compliance, permits, and other documentation. Businesses that have completed the necessary legal steps are better positioned to compete for lucrative contracts. Technology is also changing how businesses operate and comply with regulations. Digital accounting systems, cloud-based document storage, electronic invoicing platforms, and online compliance tools can simplify administration and improve accuracy. Entrepreneurs who embrace technology often find it easier to meet legal obligations while focusing on growth. One common mistake made by new entrepreneurs is delaying compliance until the business becomes profitable. They assume that legal requirements can wait until later. Unfortunately, this approach often creates problems. Penalties can accumulate, records may become difficult to reconstruct, and opportunities may be lost. It is usually easier and more cost-effective to establish proper systems from the beginning. Another common mistake is relying solely on informal advice. While friends and family may offer useful guidance, legal and regulatory requirements can change over time. Entrepreneurs should verify important information through official channels and seek professional advice when necessary. Investing in accurate information can prevent costly mistakes. Building a serious business in Kenya requires patience, discipline, and commitment. Success rarely happens overnight. The businesses that thrive for decades are usually those that invest in strong foundations during their early stages. Legal compliance may not seem exciting compared to marketing campaigns or product development, but it plays a vital role in long-term success. Every registration certificate, permit, contract, financial record, and compliance document contributes to the overall strength of the business. Together, these elements create a framework that supports growth, protects assets, and enhances credibility. They enable entrepreneurs to focus on serving customers, expanding operations, and pursuing new opportunities with confidence. The Kenyan economy continues to present significant opportunities across sectors such as agriculture, technology, manufacturing, renewable energy, logistics, tourism, education, healthcare, and financial services. Entrepreneurs who combine innovation with strong legal foundations are well positioned to benefit from these opportunities. Ultimately, building a serious business is about more than generating profits. It is about creating an organization that can survive challenges, adapt to changing conditions, and deliver value over the long term. By choosing the right business structure, registering properly, maintaining compliance, protecting intellectual property, documenting agreements, managing finances responsibly, and implementing good governance practices, Entrepreneurs can transform promising ideas into successful and sustainable enterprises. The journey may require effort and investment, but the rewards can be substantial. A legally compliant business enjoys greater credibility, stronger growth prospects, improved access to financing, and increased resilience. For entrepreneurs who are serious about building lasting success in Kenya, establishing a strong legal foundation is not optional. It is one of the smartest investments they can make.